a day where we're seeing stocks kind of extend to a certain extent, Carol, that sell-off from yesterday.
Yeah, I mean, it just feels like it's kind of running out of steam. Any kind of momentum that we saw earlier, very mellow. Although Tim and I have been talking a lot about that despite the kind of muted moves right now in the major averages, you look at some specific names and you've got some big rallies and some big declines.
Yeah, like Micron Technology, Lamb Weston, just a preview for some of the decliners that I'm looking at that are making outsized moves. It does look like, though, that if the Dow does finish in the green today, I know this is a huge deal for you guys.
Yeah.
It could snap a 10-day losing streak going back to 1974. It was the longest.
You know, I look at today's economic data. I can't remember the last time I paid this much attention to the third revision of a GDP report for the last quarter, but it really kind of reinforces what the Federal Reserve did yesterday.
Yeah, I mean, growth actually moved higher. Business investment was really good. Personal spending was really good. Mike McKee made this point that Scott Bessen's plan for 3% growth based on third quarter GDP, he'd have to actually reduce growth to get to his level that he's targeting.
And that's a good thing, right? I mean, for markets, that should be a good thing. Of course, they're all concerned that growth might actually mean, well, extra inflation. And we saw the inflation numbers come up in that report as well.
Yeah, taking a look there, it just looked like a really sad close, you guys. We're like limping there. Triple witching tomorrow.
All right, we got to get these folks clapping a little bit harder here. I mean, you got one job when you're up there, folks. Clap and cheer. Look at the Santas.
They have hats.
They got it.
That's festive.
All right, ho, ho, ho to everyone down there at the NASDAQ. The NASDAQ composite, though, not much cheer on the day. Down about 23 points or 0.1%. The S&P down by roughly about 5 points here. We'll just kind of call that unchanged, not even quite 0.1% there. And we should point out the Dow Jones Industrial Average, as Tim was just pointing out here, rising for the first time in 11 sessions, up 16 points, assuming those numbers hold. That's basically a fraction of 0.1%. And the Russell 2000 down in the red, once again, down 0.5%.
Yeah, Santa a little mellow. Even Bitcoin's down today, down about 4.6%, Scarlet. But if you look at the S&P 500, you've got most names, some up, but most of them more than 300 to the downside.
Yeah, and leading on the downside, when you look at the sector performances, our real estate investment trust losing about 1.7%. Materials and energy also down about 1% apiece. On the flip side, utilities are gaining ground, 0.5%, financials and technology, but those gains are fairly modest with tech only up by 0.2%.
All right, guys, to the individual gainers. Darden Restaurants, your number one gainer in the S&P 500, up 18% at its highs, finishing the day just shy of a 15% gain. Shares rallying to a record after the owner, Olive Garden and so on, raising full-year sales outlook, topping estimates, suggesting casual diners are eating out more, which is kind of interesting. Stock gained as much as I said, about 18% here. So very, very big jump, most, I think, in about 4 or so years. Soho House, that one also soaring in a big way, up 65% at its highs, soaring the most ever, finishing with about a 49% gain after saying it received an offer from a new third-party consortium to buy the company for $9 a share, stock closing at $7 and change. That $9 a share, though, is a more than 80% premium to where the stock closed yesterday, so quite an offer. The offer supported by the company's executive chair and controlling shareholder, Ron Burkle, and also the private equity investment firm that he helms. So that was certainly a standout. And Marvell Technologies, this one was up 3.7% in today's session. This is your number one gainer in the NASDAQ 100. Stock getting a boost from the analyst community. It will become one of the big winners from the rising demand from AI semiconductors, that from Raymond James. They raised their price target to 130 from 120 and reaffirmed their outperform rating on the stock. Stock closing at 109 and change.
All right, you got the gainers, Carol.
Wait,
Sorry,
no,
guys, we
before.
need to get to FedEx.
Yeah, go ahead.
Go to it.
FedEx, the earnings aren't out just yet, but they are announcing their intent to actually split up two of their key units here. They're going to separate FedEx Freight and create a new two industry-leading public companies. So this is a full spinoff here of the two units here. Again, we talk about these units that were actually brought together not that long ago. The board now announcing here that they plan to separate FedEx into two publicly traded companies. One will be called FedEx and the other will be called FedEx Freight, which will allow them to continue to pursue their growth strategies independently and allow for more customized operational execution. So the real headline here, guys, is FedEx, a singular company, will now become two.
And Bloomberg Intelligence says that unit itself could be estimated to be worth between $31 and $33 billion. We'll get to those numbers more in just a moment. Another headline here, President-elect Donald Trump backing latest GOP short-term government funding plan. He says the GOP deal includes extending the debt limit to January 2027.
All right, and on the heels of that FedEx announcement that it is spinning off its freight business, we also get the numbers for the last fiscal fiscal quarter. Second quarter adjusted EPS $4.05. Analysts were looking for $3.98, so that is a beat. $22 billion comes in shy of the expected average analyst estimate of $22.15 billion. Operating margin 6.3% is higher than the anticipated 6.06%, and adjusted operating income $1.38 billion, just slightly higher than the expected estimate as well. In terms of the full year outlook, adjusted EPS of $19 to $20. Previously, FedEx had anticipated $20 to $21. Full year adjusted EPS, again, higher than what it had. Adjusted EPS $19 to $20. Previously, it saw $20 to $21, so that is a paring back of that full year adjusted EPS. Okay,
shares higher right now by a little over 10%. But back to some of the other big news out of FedEx, the fact that the company says they're going to separate into freight and separate FedEx Freight, creating two industry-leading public companies. Here's what the company says about the strategic rationale here. They say enhanced operational focus and strategic execution. They say distinct and compelling investment profiles. They have strong balance sheet and capital allocation optionality, and a shared brand, because they say the FedEx brand represents speed, reliability, and trust, and the values will extend across both businesses, with the new company continuing to operate under the FedEx Freight name.
Got to say, there's more commentary from the company's CEO, and this is coming from Raj Subramanian. He says the Federal Express segment delivered operating profit growth despite several headwinds, including the continued weak U.S. domestic demand environment, as well as the expiration of our U.S. Postal Service contract. And then the company's executive VP and Chief Financial Officer, John Dietrich, he said, I remain confident FedEx will continue to grow earnings this year despite the challenging demand environment as we focus on transforming operations and improving revenue quality. But again, I'm just looking at that, Romaine, and just talking about kind of the headwinds that are out there for this company.
And it's kind of interesting because we talk about how these units were, as combined, were sort of the strength of FedEx, at least relative to its closest competitors like a UPS and a DHL. But the idea that this seems to be more about cost savings, at least on the surface, is how I'm reading it here. It's interesting that that's sort of the tack they're taking here. They're also saying that it's going to take about 18 months for this to play out here. They have advisors, but I'm also curious to see who's going to lead these companies. Like, I assume Raj is going to stay behind at the big FedEx and they'll find someone new for FedEx Freight?
Well, I don't know. I mean, their freight business also houses the less than truckload part of their business. And all told, they say that that part of the business was $9.4 billion in revenue in fiscal 2024. But that's really the big news. Plus, you get a buyback now of stock from FedEx as well.
Yeah, not too shabby. Stock's up about 11% at this point. We're going to be talking about this one certainly into the Friday trade. All right, guys, that's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. We'll see you again, same time, same place tomorrow.